Hello everyone, how's it going? In this video, we're going to talk about Lucid trading under the ticker symbol LCID. It's been one of the most speculated stocks in the past few years. Some have said that it might be the next Tesla. Others are simply betting on a giant bubble that'll eventually collapse. Regardless, most people are hoping that this company is going to be the next heavyweight in a burgeoning industry. Lucid is also one of the few EV companies actually having a product rolled out. And as time went on, the company's price action, the investors' hype and hopes went through huge roller coasters. But even till this day, some are still wondering if this is still a bandwagon they can hop on. So in today's video, we will take a look at Lucid and see if the company still has a place in our portfolios. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. Over the past few days, we have seen that Lucid stock has remained between $11 and more like $11.50, so it kept the high baseline intact, which is, in my books, a good news. And this means that people's desire to push the price up hasn't died down, but at the same time, it largely depends on how well the deal is going to go. So we can tell that the tendency to go higher is definitely there. There's no point in denying that, not only because there are a lot of people who hope that the deal is going to go right, but there are also a lot of people who hope that their wish is going to become the self-fulfilling prophecy. What this means is that they will hope that from momentum will create additional momentums. And for those people, if enough people buy, then this will convince more people to buy, which will then convince even more people to buy. And I think that to some extent, this logic would definitely work, but it can only work in a certain kind of environment. And not just regarding the stock itself, but especially regarding the market at large. We might be in a sort of like a pseudo version of this sort of market condition. However, I'm not entirely convinced that we're gonna live March 2020 and beyond once again. Okay, just because it's still far too recent, and that some people are still raw about Lucid. Let me explain. Lucid, when it was called CCIV, was one of those stocks that robbed the feathers like pretty roughly for many people. And a lot of people had very high hopes in Lucid, very, very high. And the suits have basically screwed around with the position, which resulted in the collapse of CCIV, which later became Lucid. And this is why I believe that going forward, Lucid definitely has to prove to the market that they are in this time for real, and that whatever deal that they have announced is going to go through. And even then, there might be some other obstacles down the line. First of all, the deal may not go through, right? It doesn't just depend on them, but also depends on the potential buyer. The other thing is they may have an actual desire to see this deal going through. Much like back in 2018 and 2019, we have seen Elon Musk trying to push the stock price of Tesla up by saying that some foreign wealth fund potential clients have decided to maybe take Tesla private by paying everyone a premium. Well, of course, the story ended well because in 2020 and 2021, Tesla went through the roof. But if this didn't happen, he might have some some major problems going down the road. I know that recently he got off the hook, but we can't help but to think that this was kind of sketch, right? To update this deal live on Twitter and trying to assume that it's going to go through when in fact it didn't. So it kind of left some bad taste in people's mouth. And going forward, we have to consider the possibility that people have like more complex reasons to buy or to not buy Lucid, and that this is no longer some spring chickens in the stock market, that people actually have a certain memory about how it went in the past. And looking forward, I would say that there can only be two possibilities, right? Number one, the deal goes through. Number two, the deal doesn't. In both of those cases, there are arguments to be made so that Lucid goes lower. First of all, if the deal goes through, a lot of people sell on the news. And even if the stock has reached, $50 before, or at least $40 before, does it really mean that whoever who want to take Lucid private are going to pay that kind of price? I'm not convinced. And at the same time, if the deal doesn't go through, obviously there will be a lot of people panic selling. For me, the second scenario is almost better than the first one, because at least you get to lower your cost. And this is primordial in investing, and this is primordial even in trading. In this case, I would highly recommend to invest in Lucid going forward. The other thing why I'm not overly convinced that we should buy in one shot now versus slowly buying them over time, drip by drip, it's simply because if you look at QQQ, so the Nasdaq index, I don't think that we're out of the woods just yet. Okay, I think that at some point we're going to have some issues regarding equities. Simply because the equities haven't been affected by that much just yet. Maybe they're down by like 50% from the peak of 2021 and 2022, but it doesn't mean that they are objectively in the absolutes back to a reasonable level. For example, people were expecting to go into recession around 2019. Did that really happen? Right? People were expecting that in 2020 it's going to be Armageddon, but it didn't happen like that. So this is why my feeling is Lucid Motors, also known as Lucid Group, is an EV manufacturer that is poised to shake up the industry with its cutting-edge technology and designs. While other EV manufacturers have been making strides in the industry, Lucid stands out with its advanced battery technology, the dynamic designs, and the commitment for a sustainable business model. One of the key differences of Lucid Motors is the battery technology. It is known for significantly longer range and faster charging times compared to the competitors. Its car, Lucid Air, is capable of traveling over 500 miles on a single charge, and charged at 20% in just 4 minutes. This sets the company apart from the competitors like Tesla. Another differentiator for Lucid Motors is the aerodynamic designs. The company's first vehicle, Lucid Air, features a very sleek and nice design that not only looks stunning, but also helps to improve the airflow and the efficiency of its energy. Lucid Motors also incorporates lightweight materials like carbon fiber into the vehicle to further improve the efficiency and the range. This attention on detail sets the company apart from other companies who may prioritize function or economies over form. In addition to the advanced technology and design, Lucid is committed to sustainable business model. The company uses renewable energy sources to power its production facilities, and it's committed to reduce its environmental impact throughout the entire life cycle of the vehicles. This commitment sets the company apart as well. There is also another aspect that I would say is what separates Lucid from the other ones, but is now more blurry, which is its focus on luxury. The company's first vehicle, Lucid Air, is a luxury vehicle sedan boasting a spacious and comfortable interior, advanced driver's assistance systems, and a host of other luxury features. This focus of luxury sets Lucid apart from other companies which may prioritize affordability over the premium features. If we look at the company's long-term tendencies, it's not hard to see that the bubble that gave so much hope to traders around the world has now bursted. The market is no longer willing to blindly follow the latest hype, and sometimes I would say that it's also because it cannot continue this bubble forever. I mean, the industry is facing some significant headwinds coming its way, and at some point, the PowerPoints are no longer enough. We have to see profits. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a very rough patch for a few years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that, as an investment, has a lot of value. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company's fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reason, they can still last a very long time, bringing the title to an unbelievably low price. Hyliion and Paysafe would be good examples of this. Lucid Group, an electric vehicle manufacturer, has a strong financial performance in 2022. The company reported revenues of around $200 million for Q3 of 2022, a significant increase from the $232,000 in Q3 of 2021. This has mainly been caused by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan that has been well received by consumers and that has helped to establish the company as a massive major player in the industry. Currently, Lucid has a negative net income caused by the fixed costs and other operating expenses that should be absorbed once the volume picks up. Overall, the company's financial figures paint a picture of a company that is growing its operations but lacks a little bit in discipline of cost control and needs to scale up the operations to start having positive cash flows. Now, let's also talk about the shareholder composition, because it is something that's quite important to determine if the company is good for trading or investing. Given that 72% of the total float is owned by the institutions, this would mean that the price volatility should be lower than most other stocks. The reason why this might be the case is because institutional shareholders have far more diversified portfolios and they can tolerate the short-term volatilities. Another behavioral difference is that institutional shareholders tend to be more active and involved in the corporate governance. They're more likely to vote on important matters like mergers and acquisitions. They also tend to be more vocal in expressing their opinions on companies' directions and performances. Retails, on the other hand, tend to be far less active. They may not get involved, they may not vote, they may not be informed of important decisions to begin with. They just hope that they can yield a profit from owning a share. The short interest in Lucid has been increasing in recent weeks, meaning that more and more investors are betting against the company's stock by short selling it. The short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back at a lower price later and to return them to the lender, profiting from the difference. As of most recent data, the short interest represents about 7.5% of the total shares outstanding. This is a moderate level of short interest. It's also worth noting that it has been increasing in recent weeks, and this can be a bearish sentiment amongst investors. Now, if the company has been reporting strong outlooks and results, this could lead to a short squeeze. I mean, things are not really that clear-cut in the real world, but generally speaking, people would come in if the fundamentals are good. If more people buy, then the shorts would have losses. The more losses there are, the more compelled the people short positions want to recover. It's important to note that the short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen, regardless of how many stars are being aligned. Going forward, I think that we're not done with the possible pullbacks just yet. So this is why I would recommend to buy Lucid now and over time, and to continue buying it as low as $7. And then to start cashing out as Lucid reaches and goes above $20. I think that it's going to be a matter of years that we can expect this kind of return. And also, there's a major assumption here, is that EV, the sector, remains relevant, and that the market cap formula will remain unchanged.